Right, well, let's see what investors have been doing this week just in terms of trends in trading. We're joined now by Gemma Dale from nabtrade. Gemma, great to see you on this Friday.
Nice to see you too.
All right, so overall, how would you look at the week, just in terms of volumes?
Yeah, so it's flattening out a bit. It's that period of the year when we've passed reporting season, dividends are being paid. So, there's not much that's come dividend now. People are sort of sitting quietly on the sidelines waiting for news. Something big has to happen to drag them out. I think with a lot of our investors, what's been most interesting is cash book is continuing to rise. So we saw this through sort of late 2019 and early 2020 cash book getting higher and higher and higher as people going, I haven't seen anything I'm terribly excited about buying. If I'm trimming, I'm just going to keep the cash on the sidelines. I'll let a few things run, but not everything. So we've seen a lot of cash piling up and they're not finding enough to buy to get back in yet, but we'll see what happens.
All right, just in terms of those stocks that are favourites out there, obviously just as far as the buy now, pay later sector, Afterpay, Zip, continued pressure there, downward pressure, obviously reflecting what's going on elsewhere just as far as tech stocks, those growth stocks are concerned.
Yeah, so they're both a sell now, which is interesting. Zip for a while has been a trading stock, really actively traded by a sort of reasonable size group, pretty large compared to the other very actively traded stuff. It's really flattened out, so now it's kind of a buy and a hold or a sell. We just don't see the activity in it that we were seeing, and Afterpay is a sell. So a lot of people who rode it to 160 and then rode it back down again are going, do you know what, I've had this for a while. Our average buy price for Afterpay last year, not last week, was around the $40 mark. So we had a lot of people who've done incredibly well, and even at 105, they're like, do you know what, that's not bad, I'll take some. I think a lot of people feel like they missed the opportunity to take profits earlier and they'll just take a bit now. Yeah. So it's a sell, Zip's a bit the same.
Yeah, also, speaking of taking a profit, CSL, now in fact I just mentioned there, it is down over 1% today. What's happened there? Because there was a bit of a bounce this week.
Yeah, so CSL's been fascinating. I mean, it's been an extraordinary range for it really over the last 12 months. It was down to 250 during the COVID period. We know it was up near 350 for a while there. We had some real trading in the sort of 270 range and up around the 280 range. They were taking profits at 280, buying at 270. This run down to 250 was quite shocking. So we saw very aggressive buying through that period. We saw people throwing money at it. It's not very widely held. It's surprising how few people own CSL in the book. So we saw a lot of people kind of dragged out going, oh my God, I'm not going to get another chance to buy this at 250. I'm going to get on it. We have seen profit taking as it's bounced back. So it's been interesting. A few of those people are not long-term holders.
But when you say it's not widely held, why would that be? And is that more because the small retail investor looks at it and think, no, that's too expensive? Because it's got a big number on it.
Yeah. So a couple of things. One is it looks really expensive and has done for a very long time. We have a lot of investors who would have known it when it was $15 and they're like, I can't bring myself to pay $300 and something for something that was $15 in my living memory. Yep. In addition, the dividend is just not what they're familiar with. They're used to sort of a 3 or 4 or 5 with the dividend and they like their franking. So our big sort of retiree or self-managed super fund base who do have quite the bulk of the funds, it's not for them.
All right, now of course we've had a couple of listings on the exchange this week. The big one being Airtasker. It's taken a lot of headlines, not surprisingly, given where it's gone as far as the share price is concerned. What did you see?
Yeah, so we saw some really interesting stuff with it. Rockets on the first day, and we saw an enormous number of trades. Very small. Average trade size was around $5,000. That is small, and we don't see that very often, to see huge numbers of trades at that size. So we saw heaps of that on the first day.
What does that tell you though?
That's telling us it's all the small guys getting in and they're just trying to ride it. It wasn't super actively traded, so we didn't see 3 or 4 times movements or anything like that. We just saw people getting in on the first day. Second day, brought out our big guys. So we saw nearly 40% of trades over $100,000 on the second day of trading when they're going, oh yeah, this one might be all right, I'll get in now. I mean, they missed the first bit, but fine. It's interesting to see that they wanted to wait.
Just really quickly before you go, foreign, taking a look, obviously in the States. Volkswagen this week, it's emerging as a real challenger to Tesla. So what's happened just as far as investors are concerned and what they're looking at the moment?
So you can buy Germany as well as the US, the UK and Hong Kong on our platform, and it doesn't tend to attract a lot of attention, right? Germany's not that interesting for people, but Volkswagen suddenly pops up in our numbers. I mean, they had the diesel scandal not so long ago, which was absolutely shocking. So their environmental credentials were appalling for a while there, scandalous, and Tesla was, far away. But we're starting to see Volkswagen come in, which is quite interesting. NIO is still there as well. In the vehicle manufacturers, there is a very strong preference for EVs and for the newer technology, definitely staying away from the old world vehicle manufacturers.
Yep.
What's also interesting was I spoke to you about ARC Innovation last week, which is the hugely popular, very, very high growth fund manager. Berkshire Hathaway came through this week, which is the extreme other end of the spectrum in terms of funds management. Very different style. So we had a bit of both.
Gemma, great to get that roundup. Thanks for joining us in nabtrade.
Thanks so much.